So, what are the potential solutions that a tax attorney can bring to the table when you're facing a collection action? The first option that everybody's heard of is called an offer in compromise. This is where the government determines your reasonable collection potential. In other words, how much blood is in the turnip? If they squeeze the blood out, how much blood would they get? Reasonable collection potential is exactly that. Based on your net worth and your earnings both now and in the future, how much can you afford to pay rationally? If you owe the government $30 million and your net worth is $1, and your net income for the next 10 years is $10,000 a year, who's got a bigger problem, you or the IRS? Are they ever going to see that money? Listen, they realize this. The only reason they'll do an offer in compromise is to reduce your liability to a number that makes sense so they don't waste their collection efforts. First thing I need to tell you is less than 1 in 5 offer in compromises are accepted. The next thing a tax attorney can analyze for you is an option called tax-motivated bankruptcy. Now this is high-stakes poker here, and you really need to bring in a tax bankruptcy attorney to finalize the analysis. My firm at least knows the high spot issues and can do an initial analysis of your availability of this option. In order for debt to be dischargeable under bankruptcy, it needs to be accrued, on the books, and assessed for 2 years before it can even be discharged. The second requirement is that all debt that's going to be discharged comes from timely filed returns. If you're trying to discharge debt related to a substitute for return, even if you amended that later on, that's a late filed return and is non-dischargeable in bankruptcy. The next thing has to be looked at is what type of bankruptcy is going to stop the IRS dead in its tracks. If you own a business, you may need a Chapter 11 to stop them from collecting at the business level, and you may need an individual bankruptcy to stop them from collecting at the individual level if taxes are involved, like trust fund taxes, for example. Tax debt in bankruptcy can either be wiped away completely under Chapter 7, or a court can dictate a required repayment arrangement to the IRS under a 13. Innocent spouse relief. This should be a slide series all on its own. It's very complicated, but the basics of it are this. If your spouse has been cheating on their taxes and you have not been a participant in that cheating, and you learn of it, it may be possible to, at least as far as the IRS is concerned, have the tax debt coming out of those motions of cheating specifically allocated to the cheating spouse. So they won't be collecting against you, they will be collecting against the spouse that cheated. But I will tell you this, it's very hard to collect alimony from someone that's in a jail cell. It's also very hard to walk away with a marital settlement on 50% of your community property if that community property is evaporated paying towards fraud. This isn't a decision that should be made lightly, but it is a collection alternative. Installment agreements. Ordinarily, if you owe less than $50,000, you automatically apply for an installment agreement if you follow the correct procedure. If you owe more than $50,000, the government does not have to give you an installment agreement. It may take a tax attorney to get you one. Currently non-collectible. It may be possible to get the IRS to look at you and say, you know what, they have no net worth, they have no current net income, they're currently non-collectible, let's stop all collection action until they either have some assets that we can go after or some income we can go after. What you need to know about currently non-collectible is that the interest on the underlying tax debt continues to accrue. Right now the rate is 3% compounded daily. It's roughly 9% simple interest a year on the underlying tax debt. Writing out the 10-year collection statute. It may be possible to write out the statute. After 10 years has passed on an assessed debt, that portion of the debt is no longer collectible under the law unless the government goes to court and reduces it to judgment, which they rarely do. You need to know there's a 10-year collection statute federally, but in California there's a 20-year collection statute. Online payment plan. If you are an individual and you owe less than $50,000, in most circumstances, it is possible to get you a 6-year spread on what you owe. Take the total amount you owe, divide it by 72, that is your monthly payment. If you're willing to make that payment by letting the IRS come in and take the money electronically from your bank account once a month, it's possible to automatically get acceptance into this program. Also, if you make 3 of those payments timely, it's possible to get the government to remove the lien related to that tax debt. To get an online payment plan, you must be in full compliance. On a go-forward basis, you must make your estimated tax payments as they come due, you must file your taxes timely as they come due, and you must stay in compliance. Also, to qualify, none of the tax debt at issue can expire within 6 years on the 10-year collection statute. In other words, if they allow you 6 years to pay back your tax debt and some of that tax debt is going to fall off because of the 10-year collection statute, this may cause that plan not to work. There is an express version of the business online payment plan where the tax debt is $10,000 or less. This is accompanied by relaxed application procedures, including the possibility of not having to supply financial statements. Again, it's a 2-year repayment period. So here's my conclusion to all of this. The average person spends between 30 and 50% of each dollar they earn towards the current year's taxes. Now, if the government comes in after the fact in a collection scenario and demands that you take 25% of every incoming dollar and start servicing the back tax debt, look what that does to you. This leaves you with between 25 cents to 45 cents of each incoming dollar of current year income to support your lifestyle. So I'm going to end this collection series video with talking about situations where the IRS is not likely to be sympathetic to your collection problems. And in that situation, you need a tax attorney on your side more than ever. You're likely to find the IRS non-sympathetic when you're a non-filer. If you've been out of the system for several years, especially where the government has gone through and prepared substitute for returns, and then you've had to fight with them to replace those substitute for returns with actual returns, when you finally get to the collection side of this problem, you may not find them very sympathetic. You need a tax attorney on your side. Besides, non-filing in itself is a crime. You need to see my series on non-filers if that's your situation. If the underlying tax debt results from an audit where you were at fault, especially where there may have been badges of fraud or where fraud is suspected, you may not find the IRS very sympathetic to your collection woes. If you've gone through either an offshore or domestic voluntary disclosure, you may not find the IRS very sympathetic to your collection problems. If you, at least on paper, show the present ability to pay every dime of what's owed, you may not find them very inclined to give you something like an installment agreement and spread it out over a number of years. They may want their money now. In that case, you may need a tax attorney. They'll be looking at your retirement funds, your equity in your home. They'll be looking at any present asset that can be grabbed, turned into cash, and used to pay off their tax liability. Again, they want their money now, not spread over 5 years, 6 years. If you have a history of not making estimated tax payments or making insufficient estimated tax payments, or in claiming multiple exemptions so that insufficient withholding is taken on your W-2, which could be a crime, by the way, you may find a very non-sympathetic collection officer. If you continually break promises that you make to the IRS automated collection services or to a revenue officer, you may find them unsympathetic. This includes repeatedly breaking installment agreements that you arrange. If you have insulted or alienated your revenue officer, if you've gotten hostile with them or blown them off saying you have no power to affect me, you may find them non-sympathetic. You need an attorney more than ever in that situation. If you've been commingling your business and personal assets to maintain your lifestyle, in other words, having your business pay your living expenses, you may find them very upset with you. If you've repeatedly refused to respond to information requests and not given them the information they need to figure out your ability to pay and work this issue out, you'll find them very unsympathetic. If you're a repeat offender, especially with the same revenue officer, she thinks she has you out of her inventory and you keep popping back up in her inventory, she's dealt with you multiple times, you'll find them get very short with you after a while. If you're a tax protester and it's known to the IRS, oh boy, they won't be sympathetic to your collection problems. The last thing I need to tell you is that there are many potential felonies that are possible to incur in a collection scenario. If you owe the IRS money and you do things like hide your assets in other people's names, sell your assets, your valuable assets, to a neighbor down the street for $1 with the intention they're going to give it back to you, creating multiple corporations and walking away from tax liability, corporation after corporation after corporation, lying to a collection officer, hiding assets, moving your assets offshore to a foreign jurisdiction, any of these actions can put you in jail. If that's your problem, you need me more than ever. I have a lot of experience dealing with these type of issues. Thank you for watching this video.